Hey, good morning, everybody. Today is Thursday, September 1st, 2016. My name is Cliff Backus, and this is your PushButtonStockTrading.com daily video market review. Let's get started this morning by taking a look at the NASDAQ Composite. But before we do that, stocks had a stealthily bullish day yesterday. Although all the major indices closed down on heavier trading volume, markets closed near their highs for the day, indicating professionals bought into the weakness. That noted, both the NASDAQ and the S&P closed lower but at the top of their daily trading ranges. Trading volume was heavier than Tuesday's levels and very heavy for the week before Labor Day. The NASDAQ closed down 9.77 points or 0.19% at 5213 and finished below trendline support. Meanwhile, the S&P closed 5.17 points or 0.24% lower at 2170 and also undercut support in the 2175 area. Technically, the S&P recorded a distribution day, but as noted above, yesterday was more of a bullish session, and so, as has so often been the case in the past month or so, we get a very weak distribution day. Our market timing model remains on a buy signal. A buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. Investors.com is indicating an uptrend under pressure with 4 distribution days on the NASDAQ and 6 on the S&P 500. Declining issues edged advancers by better than 3-2 yesterday. New highs bettered new lows. Small capitalization stocks handily bettered large yesterday and continue to outperform on a 10-day moving average basis. This is bullish. The market continues to move sideways. The S&P has traded in a 40-point range for 6 weeks now. We remain on a buy signal on both the S&P and the NASDAQ, but those signals are showing signs of strain, as both the 10-day simple and the 21-day exponential moving averages on the S&P are trending lower. That gives the S&P 3 out of the 4 criteria needed to switch to a don't buy signal. Our indices both remain trendless. It's best to remain cautious until this market picks a direction. Up or down, eventually the market will show us where it wants to go. In the meantime, this is typically a very low volume week and can be volatile. Be careful and keep your stops in place and current. Okay, yesterday the NASDAQ was down 9.77 points or 0.19%. We closed at 5213. Note we undercut this level of support at this trend line. This trend line goes all the way back to the beginning of the bull market in March of 2009 and has acted as both support and resistance over the past year or so. If this market's going to continue higher, I think it's critically important that we recapture this trend line. Yesterday, trading volume was higher than the prior day and actually right about average daily, which is unusual for the week before Labor Day. For you followers of William O'Neill, we are in an uptrend under pressure. We currently have 4 distribution days on the NASDAQ. Those distribution days are very evenly spread and aren't clustering on the right side of the chart. And so I don't think that distribution is as much of a concern as it would appear to be. Our market timing model is on a buy signal, and the market right now appears to be bracketed by support down here in the 5165 area and support up here in the 5232 range. Let's see what the S&P 500's up to. Yesterday the S&P was down 5.17 points or 0.24%. We closed at 2170.95, and technically, since volume was higher yesterday than the prior day, and we were down more than 0.2%, we recorded a distribution day. But notice how the S&P closed right at the top of its daily trading range right here. That's more bullish than bearish activity. It's an indication that as the market sold off, the professional traders that moved the market stepped in to drive the market back higher. Right now, the S&P is in an uptrend under pressure. We have 5 distribution days, only one truly solid distribution day. The rest are fairly suspect. Distribution has been well spaced and hasn't been clustering on the right side of the chart. And so again, like the NASDAQ, I don't really believe that distribution is that much of a concern. We are on a buy signal, but I want to point out that that buy signal at this point is fairly weak. In order to go to a don't buy signal in the market, we're going to look for 4 things. First, the S&P has to be above its 200-day moving average. Well, we're well above the 200-day moving average at this point. That's the first criteria. Second criteria is the 10-day simple moving average has to be lower than it was yesterday. Right now, the 10-day simple moving average, which we show in green, is trending downward. The 21-day exponential moving average has to be lower than it was 2 days prior. It's hard to see. The 21-day exponential moving average is in pink here, but it is in fact lower than it was 2 days ago. And the final criteria, the market has to be selling at least 1% below its 21-day exponential moving average. This envelope right here is the 1% mark. And so in order to go to a don't buy signal, we need to see the S&P close below that 1% envelope. It hasn't done that yet, and so we remain on a buy signal. But at this point, the buy signal is looking pretty weak. So we need to be cautious. Let's take a look at our position trade holdings. We currently hold 6 position trades, which is quite a few. Generally, we want to hold no more than 5 positions. We'll be looking for an opportunity to shed 1 or more positions in the near future. We currently hold Alibaba, BABA. We bought Alibaba when it gapped out of this first stage cup and handle base at $85 a share. We bought this gap after the company reported earnings. Notice how we had this spike in volume around the time that the stock gapped out. That's very bullish. Our current stop on Alibaba is at $86.94. Next we have ACIA, which we bought on this IPO base. We bought when it broke above the IPO base price. Currently our stop on ACIA is at 104.39, but we would sell half the position if it traded below 100. Next we have MaxLinear, MXL. MaxLinear we bought on the bounce off of this 200-day moving average. The current stop on MaxLinear is $16.21. Zimmer Biotek, ZBH, we bought as it broke out of this first stage base at 123.43. Our stop on Zimmer is at 113.99. Edwards Lifesciences, we bought at 117.46 when it broke out of this 3 weeks tight pattern. Stock's kind of been struggling since then. Our stop on Edwards Lifescience is 111.59. But if we needed to raise cash anytime in the near future, we would probably look to sell Edwards Lifesciences. And our final holding is Mobileye, MBLY. We bought Mobileye when it poked above this first stage base. The stock fell back into that base, but continues to act fairly well here. We paid $50.18. Our current stop is $47.67. And before we go, yesterday we were stopped out of YRD. We bought YRD when it bounced off of this 50-day moving average. The stock fell back and yesterday triggered our 8% stop loss. We would look for another opportunity to buy YRD, particularly if it came back and touched its 50-day moving average again. Currently, our swing timing model, the NASDAQ Composite is trading below its 5-day simple moving average and its 10-day simple moving average. The 5-day simple moving average, which we show in pink, is trading below the 10-day simple moving average. And right now, our swing timing model is indicating a market trending negative. We currently don't hold any swing trade positions. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.